Hello, and welcome to our webinar. My name is Lauren. I am the Program Manager for Disaster Services at the Houston Arts Alliance. What that means is I run the disaster program here at HAA, and we are so excited to be partnering with TALA, the Texas Accountants and Lawyers for the Arts, to do this webinar for you guys today about PPP. I have just a couple of things to tell you, and then I'll hand you over to our incredible speakers today. First of all, the Houston Arts Alliance Disaster Services Program does more than webinars. We have a website that has lots of resources available for you, and that website is ready.haatx.com. We would love for you to visit it and see how else we can help you. One of the things that we do have coming up is a webinar series we're calling Understanding When Arts Events Will Return. We have engaged infectious disease specialist to talk to us about the vaccine and what we can expect to happen when about the vaccine. That webinar is on Monday at 9 a.m. and you can sign up for it on our website. We're very excited to be partnering with the Texas hospitals thing that I have forgotten what it's called. District, Texas Medical District. Oh my gosh, I am a Houstonian. I was born here. It just like completely left my brain. The other thing to tell you is that we are recording this webinar. It will be available on our YouTube, and we will send you the link at the same time that we send you an invitation to a small group session. So what we have negotiated, I guess, or what TALA and HAA have come up with is this great idea where we have this webinar today, and then a week from Tuesday, yesterday, we are inviting you to a small group session of 5 to 10 people, one-on-one with either Kathy or our expert yesterday. And you guys will be able to ask them questions one-on-one about the things that you learned tonight and questions that might come up between now and then. So we're very excited about that. And you'll get an email from HAA in the next couple of days with the invitation to that, as well as a link to this recording. Again, I want to say thank you so much to TALA for doing this. And I want to tell you a little bit about our presenter. Her name is, I'm going to mispronounce your last name, Kathy, and I apologize. Her name is Kathy Plock.
You're on mute, Kathy.
So Kathy, while she's working on her sound, I'll let you know that she is a CPA at Durio & Company. She previously spent 7 years as a tax compliance and consulting specialist at Harper & Pearson Company. She has been in public accounting, preparing all types of taxes for 35 years and has been working with small nonprofit organizations like yours for 20 years. Kathy is a past president of TALA and has been a volunteer with the organization since 1999, so 22 years. She's also a member of the Houston CPA Society and served as the society's president in 2009 and 2010. And we are very excited to have you, Kathy. But before we have Kathy start talking, I'm going to pass it over to Alyssa from TALA, who will give you a little bit more information about what they do. And I will see you guys at the end. Thank you so much.
Thank you, Lauren. So I'm Alyssa Mccain. I'm Executive Director of TALA. I think a lot of you may be familiar with us. Our signature program is that we offer pro bono accounting and legal assistance to artists and small nonprofits located anywhere in Texas. Kathy, could you advance to the first slide, please?
I would love to, but now I'm stuck again.
So,
let me see. Lauren?
Kathy, can you see the screen with your notes on it?
Yeah.
So click on the screen with your notes on it.
All right.
And then you should be able to advance.
No, but it's advancing on the wrong screen again. You need to go back to the laptop. What happened? When I unmuted myself, it got stuck.
Okay. Can you advance the screen that we can see?
No, that's what I'm saying.
So
Okay.
Kathy,
Oh, there it goes. Something happened.
Okay. I think there we go. Okay.
you got it. Yay.
It just got stuck. I had to, it's a touch screen. What can I say? Sorry, folks.
That's okay.
Thank you
All
for your
right, go
patience.
ahead, Alyssa.
That's all right. So we do serve individuals and small nonprofits, and you can basically be in any discipline as long as you identify as a creative. And can you go to the next one, Kathy? So these are some sample topics that we do. We do a whole lot of copyrights and trademarks and a whole lot of contract law, but that's not all we do. We've done a whole bunch of other stuff. We do like commission contracts or work for hire, or we've done some publishing stuff. We've done a whole bunch of like liability waivers for videos, film, things like that. So anything that's really related to your business, we do try to match you with a professional. There's some things that we don't do. We don't do divorces. We can't get you out of jail. We really don't sue people for you. So there's a few things that we don't do, but if it's business related, we will definitely try to help you and match you with an expert. Can you go to the next slide, please? So to qualify for that service, there's a financial qualification. If you're single or a household of one person, you cannot make over $38,000 a year. So there is a financial requirement on that. If your household is larger than one person, it would go up based on how many people in your household. There's a grid on our website that you can look at that shows you the financial considerations if you're interested. If you're a small nonprofit group, you need to have an annual budget below $200,000 to qualify for our services. And next slide. Thanks. Individual artists, the fee for the service, and you can ask as many questions as you want from an attorney or accountant throughout the year, is $75 if you're an individual artist and $250 if you're a nonprofit. I also left on the screen an inventor's note for $100. We do have a patent pro bono program. So if you have invented something and you're interested in pursuing a patent with the United States Patent and Trademark Office, we could help you do that also. And I guess last slide, just wanted to let you know about the upcoming programs we're having starting next week on Wednesday, and then the following week on Wednesday, 2 parts, The Art of Taxes. You may have attended that in Houston when we were able to meet in person. Kathy does those, and we are basically combining with our Austin CPA presenter. And so you'll get 2 CPAs each night, and you need to do both parts to get the full content. If you've attended before, you know it's probably a more 2 to 2.5 hour seminar. We didn't want to be on Zoom that long, so we separated it up. And so it's 2 nights, 2 Wednesdays in a row, and please come both nights to get the total content. We will be covering how you report unemployment and PPP and EIDL on your income tax, which is a question that we're getting almost daily now. So please come to that and learn new information and review information on deductions and everything else that you need in general to know to file your taxes. I mentioned we have an ARTS legal line once a quarter. Our next one is April 6th. It's basically call us on the phone and we'll hook you up with an attorney to answer your questions one-on-one. It's no cost, no obligation. You just call a line. So if you're interested in that, please keep an eye out. The next date is April 6th. And we are taking cases related to COVID-19. So if you as an artist or your business have a contract, even a lease, anything that has been affected by COVID that you need to talk to an attorney or an accountant about, please go fill out our form. We are doing free matches for those. They are one-off matches, and if we can, we will find a person to help you. And again, that's the COVID-19 response program. It's under the COVID-19 tab on our website. And then I did want to encourage you, if after tonight you feel like you need more information to complete your application for PPP, there will be next Tuesday a chance for you to ask one-on-one questions of Lisa and Kathy, our CPAs in a small group program. We're thankful that HAA has offered to do this. So please, if you do have questions, try to fill it out in the next week and then come back and ask us if you have things that are still on your mind. So with that, I'm going to turn it over to Kathy to get started on the program tonight.
All right. Well, thank you, Alyssa and Lauren, certainly for hosting this 2-night event. I don't know if any of you were on last night, but that was kind of designed for the small individuals. And tonight we're going to really talk about nonprofit organizations and businesses. Alyssa is going to kind of help field some of the questions. So please, utilize the chat. I'm probably going to ask a couple of questions to get some response, since, we don't have, a live presentation, unfortunately. But it will kind of help me a little bit to sort of, tailor that. And as I said, next week, if you need more information, what we're going to talk about is kind of really broad and general. There's a lot to this law. There was a lot to the CARES Act, and there's a lot to this new Consolidated Appropriations Act. So, there are a lot of situations where they're a little bit, different and doesn't apply to everybody. So anyway, with that being said, this is our agenda for this evening. We're going to talk just briefly about the Consolidated Appropriations Act of 2021, which is indeed what brought us where we are today with the second draw of the PPP. Who's eligible? How much can I receive? What expenses can I spend the money on? Certainly how to apply for a forgiveness, and then, a couple of other items that we're going to talk about. So anyway, so let's just briefly talk about the act. This was signed by the president back in December. It was it was like a couple of $2 trillion bill, but it was actually the $900 billion was for the COVID-19 relief. Because there was also funding for the government through September of this year. But there was $325 billion in aid for small businesses, which included $284 billion of that for this second round of the PPP. One of the things that it did is it included a new group of people, new nonprofit group of people, which are the 501c6s. There's some special for restaurants and live venues and the EIDL loans. We're going to talk about that. One of the big things was the simplified loan forgiveness process for borrowers that had PPP loans of $150,000 or less, and then business expenses paid for the loan proceeds are tax deductible. I don't know, you may not have really realized, I realize that, this is indeed generally for our nonprofit organizations, which of course, unless you happen to file a 990T and have unrelated business income, it really doesn't necessarily affect you as far as, whether you're paying tax on something. But if we do have any regular, for-profit businesses on the call or on the webinar today, what happened was, when the CARES Act came out, and we got this money and it was going to be forgiven. About in June, I think it was, the IRS came out with a notice saying, oh, well, if you're going to get this forgiven, then you don't get to deduct these expenses. And, the IRS has always kind of had, well, you can't, what they call double dip. And, then the practitioner community just had a big uproar about all this. And I'm like, what do you mean we can't take these expenses? And so they went back to Congress, and Congress, generally said, well, no, that's not what we really meant. We meant for you to not have to include this amount of income, but then we also want you to be able to take these expenses as a deduction. But the problem was that's not how it was written. It didn't say that in the law. So therefore, we've been waiting for that to get fixed, because we know that was what the congressional intent was, but we had to wait till this got fixed. and that was fixed here in the Consolidated Appropriations Act. So anyway, so let's get down to the detail on these second draw loans. Now, if you remember right, back in March and April, when the CARES Act came and they had all this money for the PPP loans, man, everybody just rushed, you know, to the banks and tried to get all this. I mean, it was a bit of a disaster because people were afraid there wasn't going to be enough money. And, you know, I don't know if they've ever really, I guess they have probably used all of that. But for this particular round, don't worry about it. There's plenty of money out there. At the, from what I understood, at the end of January, just this last month, there was over $212 billion still available. And also the average loan size has been about, they say about $82,000. So, you know, these are not big loans. You know, this was all designed for small businesses, and, you know, that's, you know, what this is for. So one of the first requirements, 300 or fewer employees. I'm assuming that the people on this webinar definitely qualify in that arena. You must have either used or will have used the full amount of your first PPP loan. So I find it a little difficult to believe that there would be anybody at this point that had already gotten a PPP loan last year that hasn't already used that up by the December 31st. So I don't think that's a problem. You don't necessarily have had to apply yet for forgiveness, but they just want to make sure that you've at least used that full amount of that was supposed to be. One of the big things on this new law here is that you must have 25%, must have a 25% gross receipts decline in any quarter in 2020 compared to 2019. And so there is, and then I'll go on to say here that you don't include any money when you're looking at the gross receipts. You don't include any money that you received from the PPP loan or the EIDL loan. And if you remember on the EIDL, we had both the, you know, if you qualified, you could get $1,000 per employee, which was considered a grant, and you did not have to pay that back. And then also you may have also applied for an EIDL loan and got that. So what they're saying is when you're looking at the gross receipts, that you're not going to include that $1,000 per employee, the PPP money that you got, and also the EIDL money that you got.
So Kathy, can we, this may be on the slide actually, now that I'm looking at it. There are a few people that did not apply for the first round. Would you be able to address that quickly on what they should do and if they're still eligible?
Right. Well, and that's coming to the next slide. So we have this PPP round 2, but then we have this section or this group of people which we consider the first-time borrowers. Now, those people would have generally been either A, because you just never applied the first time last year. And you know, I know I fielded a lot of phone calls from TALA, you know, that had people have questions. And there was some people that were a little concerned about whether they wanted to even apply for it or not. And so, you know, you may have decided for whatever reason not to apply for it. So that you're going to have that group of people. But then also, since this particular, you know, when the first round came out, it was for, you know, nonprofits, 501c3s. That was it, and that's generally, you know, your normal, you know, charitable or organizations. And of course, churches we can still have, they still are qualified. But with this second round, what they did is they added 501c6 organizations. And those are generally your organizations like, Lauren said that I was a past president of the Houston CPA Society. That is a membership organization. So membership organizations, your trade associations, you're also looking at like your Rotary Club, those are 501c6s. And so even though this is PP round 2, these 501c6 organizations would be first-time borrowers. So that's, a little kind of funky. I think I'm like you, Alyssa. I was like, what are they talking about? But yeah, so you do have some first-time borrowers, even though this is the second round. With the first-time borrowers, though, businesses, the regular businesses that may have not filed, or applied for it the first time, 500 or fewer employees, probably not a problem. The 501c6s, 300 or fewer employees, probably not a problem there either. But going back on the C6s, there are some rules about not receiving more than 15% of receipts on lobbying and those kind of activities. C6s tend to do more political activity and lobbying than what the C3s do. So I don't know, does that answer your question on the first time borrowers with this PPP round 2?
So if you did not apply yet for PPP, the first part, would you just go to your bank, or would you just let them know that you're needing a PPP1 application, or do you know, is that the same application?
Best of my knowledge, it's going to be the same application because, and we'll look at that application here in a minute, the top part of it. So
okay, so all the information following is going to be pertinent to those people, whether they're applying for a first or second round. Okay.
This Consolidated Appropriations Act basically built off of what the original CARES Act was. So almost a lot of the same rules that applied in the CARES Act for the first PPP loan is going to be the same as what it is in this one here. So a lot of that hadn't changed. They've just added the main thing. One of the main things is they've added the 501c6s to it because, that nonprofit community was saying, well, why are you're letting the C3s, but why not the C6s? And so anyway, and there's a lot of 501Cs, around. So, but anyway, so, you're like, okay, well, how much can I get? The maximum loan, as you can see, is $2 million. Don't know how many people there's not anybody that I've known, even my clients, that have gotten that much. So the loan amount is 2.5 times your average total monthly payroll cost. That's the same as it was the very first, PPP loan with the CARES Act. That hasn't changed. You can, when we talk about the 2.5 times your average monthly payroll cost, now with this second PPP loan, you can either use 2019 year or you can use the 2020 year for your payroll. And I shouldn't have to say this, but I'm going to go ahead and say it anyway, because what I experienced last year when the first PPP round came out is people were realizing, oh, wait a minute, your independent contractors are not payroll. They do not count. Your volunteers do not count. how many organizations out there are totally run by volunteers? A lot of them that I'm not only have as clients, but also I'm a part of. And so this is payroll. You have to have regular W-2 employees for this to work. So I'm just going to say that. You still need to have, and I'm sorry, let me go back to the payroll costs. So it's not just your salary. When you're looking at your payroll costs, it's a total of the actual wages, the salary. If you pay group health insurance, you can add that. Excuse me, life insurance, disability, vision, if you pay vision and dental, all of those benefits that you may pay for anybody, including any retirement benefits. So all of that is considered your payroll cost per employee. So, if you happen to have, 2 employees, then you're going to take whatever that cost is for the year. You're going to divide that by 12, and then you're going to take that times 2.5. And that's how much you're going to apply for.
So Kathy, we had a question that someone was saying that they don't use an app, or it looks like a payroll service. They're asking how to show payroll. I think there may be some confusion on the independent contractors in that question. I don't know. So I just want to reiterate that independent contractors do not count for payroll. I think what I've seen mostly is they want the 941s, right? Which is what you report to the IRS each quarter with your payroll.
Right. Because when we talk about employees, we're talking about W-2 employees. They're going to get a W-2. You're going to have to pay you're going to do the quarterly reports, the 941s, obviously. Now, I kind of thought what you may be going to, and I've actually got a very large client that has this. There are PEOs out there where, and just like in my case, it's the employer, where the company pays all the benefits and the employees and everything for you. And so they're actually employees of that PEO. They're not employees of your organization. However, in that case, then you are going to consider them as employees. So in other words, what you would have to do is you would get the payroll information, because that PEO is filing all of that for you. They're filing the 941s, they're filing the W-2s, but you're still obviously giving them the hourly wages and everything. So I know, in the case of the client that I had, we just got all that information. I just went on their payroll website and was able to get all of that information in order to do their loan. So that is a little bit different than independent contractors. And what I'm talking about in independent contractors is not an employee. And there's those independent contractors, will use the term, they're the ones that get the 1099. This year, it went from the miscellaneous to the 1099 NEC, which is non-employee compensation. So.
Right. I will say, if you do use a payroll service, TALA does use that. It's pretty easy. So, this gets a little simpler most of the time. I think if you have a payroll service, you should be able to get that information about how much you actually paid out for your employees.
Absolutely.
Pretty easily.
Yeah, I know they did, all of, I'll throw out ADP and Paychecks are the 2 big ones that we generally have. The client that I had has another payroll service, but they were, within probably May or June had, all of that information very easily available. And they had, what the FTEs, which is the, full-time equivalent, employees. So yeah, having actually, I would highly recommend anybody to have a payroll service, because it's so much easier to deal with. But anyway, so going on, just like the first PPP loan, you still have the 60-40 cost allocation. You still must use 60% for your payroll cost and 40% for your non-payroll cost. Now, the good news for the new law is that the covered period, you know, is now between 8 and 24 weeks, beginning on the date of the loan. So what happened in the CARES Act is they first came out and said you had 8 weeks to use it. Then they eased up on that and they said, well, you could do, you know, 8 and then you could have, you know, 24 weeks because like this one client that I was mentioning, they actually didn't, when we did it for the 8 weeks, we didn't use all of it. So we had to wait 2 more weeks, 1 more pay period, just because of the way their timing was and everything. So, you know, that kind of got a little bit complicated, but I would find it very difficult to believe that anybody would not be able to, you know, utilize what they're getting, you know, within that 8 to 20, certainly that 8 to 24 week period.
And then Kathy, can you, I think this is going to do it. We just had a question on that 60-40 terminology. And just to clarify, that was 60% had to be utilized as payroll. And the 40% is what's coming up, it looks like, on this next slide. So I'll just let you take that over. That answered our own question there.
Yeah. So, okay. So we talked about the 60-40 split. So what are the costs? What are we talking about as far as covered costs? So first thing, payroll. Okay. And we've already gone through the payroll. That's your salaries, all your benefits and your retirement. That's part of that payroll cost. So that needs to be 60% of what you get. Then mortgage interest, if by any chance any of you have, you know, where you might own your building or something, that would be the mortgage interest, you know, only, of course, not your mortgage payment, but just the mortgage interest. Rent. So if you're, you know, if you're renting a facility, utilities, generally the utilities were, you know, your water, gas, electric, telephone. I know they were kind of talking about some other items back when we were doing the CARES, you know, the first PPP loan, but I haven't heard much about that lately. So the payroll costs, the mortgage interest, the rent and the utilities, that was the same for the first PPP loan. But now the new act added some additional covered costs. And the first one of that was this covered worker protection. Oh, excuse me. Turn the ringer off, sorry. The first is the covered worker protection expenditures, facility modification costs. So in other words, what we're looking at is, you know, the mask, the gloves, if any of you, you know, I mean, like I know when I go to my hairdresser, you know, there's the plastic, you know, things between each of the places, you know, each of the beauticians there, you know, all of that kind of expenditures that you had, you know, the cleaning equipment and all that kind of stuff. If you did anything with filters, you know, did some special, you know, air filters or something, or that's what they're looking at. So that's what that would be. Anything that would be something like that. And, you know, like we were saying here, any of those other costs that would help comply with like the CDC guidelines. Well, not only just the CDC, but probably, you know, the Harris County too. So, and then I'm still a little confused about what they're talking about. I've looked to try to get some more clarification of what they're really trying to say here, but they say expenditures to a supplier that's essential to the current operation. So I don't know if maybe the nonprofits would necessarily do this, but I know, our regular for-profit businesses that may be on the call, you may have had like a purchase order from some supplies or whatever to, that have to do with the operations of your business. And so those costs that were already set, in that PO, you'll be able to do that, but I'm not sure about that one. But the last one here, software or cloud computing services. Now, I know, although I've been able to work from home because I already had all my setup, but there were a lot of people that, especially, back when we were shut down, that needed to work from home. If you happen to, if you decided to put all of your stuff up in the cloud, and if you did, kudos to you, because it sure was helpful. Any software related to that. I know that I've seen, in our, especially our musicians and theater groups and stuff, they're doing, the Zoom costs, the production, all of this software type cost that has been able to allow you to be, to do, some of your programs via the web now. That's covered now. That's covered cost. I will say though, it is software. It is not hardware. So if you had to go, buy a new camera or you had to buy a new laptop or something, the hardware is not going to count, but the software does. So, that should really help, a lot of people, I would think. So
Kathy, yes, that's great. I'm learning stuff already. That was one of the questions. If video expenses are covered now that they cannot do live shows. So do you know if you hired somebody to help, as a consultant on that video and do things like that, would that be part of this cost?
Without actually looking into the detail and the law, I just know that they were talking about the software. I would think, because like you saying, I just know from what I've seen, so many people are doing so much online now. I would think so, but I'd have to look to see if there was any kind of more detail given about that. Okay. So we could, maybe come back to that one.
Okay. And then I had another really specific question, but I'll throw it in. They had mentioned that they rented a car because carpooling or public transportation is not as safe right now. When you talk about protection for COVID, is that just the federal guidelines that you have to follow, or would that be personal adjustments that you've made?
I don't know, Neil. I thought you were gonna. Well, let me just back up. Okay, I just wanted to say, maybe clarify a little bit on the rent, for example. That rent means like a building rent, so it's not like a car rental or whatever. It's building rent. Now, the protection expenditures, are you saying, well, now I had to, rent a car to, I don't know. From what I remember reading, they're looking more at what I've read so far and heard is they're looking more of like, the Lysol, the wipes, the mask, those type of equipment, things that you have to do to redo your facility to make it safe. I've been to some places where, now, like I said, you talk about the plastic, things around people to protect. You go to the grocery store. Now, what do you see when you go to the checkout? You see the plastic around them. That's what they're talking about. I don't know without looking into the law if it's even something like that.
Okay, well, just to mention, we had a very smart participant who has said perhaps car rental videographer may fit under essential to current operations.
Possibly, yeah. I mean, as usual, a lot of times these laws are very broad. So, it's when you start, I think at some point you don't really know how much you may or may not need that information until you get down to the fact of, have I spent, the 60, have I spent the 60%? Because I've seen that in the other, for the first one is, everybody's focused on that, but then they ended up having way more in the payroll than they really needed to. So, I guess it just kind of depends. So,
right, that's kind of the point I was going to make. I think that you should, plan on using it for a large majority of it as payroll, and hopefully you won't have to get to all these individual scenarios or gray areas, because I don't think that they've provided a lot of guidance on this yet. So it doesn't necessarily mean that you will not be able to do it, but I think you should kind of count on your expenses that you feel certain are going to fall under the category.
And I'm glad I didn't mention it, but I'm glad you just sparked my memory. Let me make it clear that if you're going to do this for this second draw, whether you're first time or a second time, you have to do it by March 31st. That is the deadline date. So you only have, month and a half or so left to go. So here's the second draw application form. I'm going to read mine because I can see it a little bit better. But basically, this is on the SBA's website, of course. That's where you need to apply. You're going to check, one of, whether you're, of course, if we've got our 501c3s, 501c6s. If you're a partnership, S Corp, I guess my question to any of you that are out there, if you type in the chat for Alyssa to look, do we have any for-profit businesses on the webinar? And if so, what are you? Are you a partnership? Are you filing a 1065? Are you filing 1120S? What are you filing? So while you're doing that, and then of course you're going to fill out the business name. It does ask for the average monthly payroll cost, and it just says here 2.5 times the payroll cost and the number of employees. And then they ask, what are you going to use it for? Payroll costs, rent, mortgage, just check all that apply. Then they have PPP first draw SBA loan number. If this is your second one, then make sure that you put that first draw loan number on there so that they can, refer back to that. Then here you're going to show the reduction in the gross receipts. And I'm going to come to how to calculate that in a minute. The other part, and I guess you can kind of see that a little bit. Applicant ownership. Remember, those of you that are nonprofit organizations, you don't have ownership, so you don't put anything there. If you are, a sub-S corporation and you're, 100% older, then you're going to put that on there. But as a nonprofit, you are not, you don't have ownership. So, and I was on the AICPA, which is the American Institute of CPAs. They've been having town halls every other week, once a week, depending on what's going on. But I was listening to theirs last week, and they were saying that there is some issues. And if anybody has tried to go online and do this and have had issues, put it in the chat that you have. I'm just kind of curious, because apparently what they're saying, there's a couple of areas that they're having a problem with. That some of the CPAs have communicated on for their clients. One is if by chance, and this is probably going to be true for a lot of your LLCs that are one member LLCs, you may have originally filed it with your social security number on there, but then when you go for the second draw, you put your federal ID number on there. And that's creating an issue because they're trying to, match the two, and they're having problems. So what that does is it kicks it out, and then they've got to have a live person go in there and check on it and do some research. So that's going to drag everything down. There's also, once again, I don't know the size of the organizations that are on here, but once again, there apparently is that the SBA has put an eligibility cap on the amount of $35,000 per employee for both. So in other words, I don't know how much your employees would be, but if you've got somebody that maybe they were maybe the 2.5 times on the first draw was $20,000 and now it's still 20 and you got a total of 40, what they're doing is they're capping that at 35,000 and they're reducing what you're asking for by $5,000, but not telling you why. So, the AICPA has sent a letter to SBA they had 4 particular scenarios that were happening. And so they've asked the SBA to, fix, clarify, or whatever. And one of the other things that they were talking about was that, I guess what they have found out in some of the first draws, that there was some people that had falsified their application. So there was some fraud going on. And so as a result of that, this particular time, they've put a bunch of filters, kind of like what the IRS does. They have filters in there now. And so sometimes this is catching something that may not, they're trying to catch the bad guys, but they're also hitting some of the good guys too. And so that's kicking it out. And then once again, that's being, going slow. So there's a problem there. So just wanted to let you know, I don't know if anybody's had any issues or whatever. So
Kathy, I'm going to pause here for a second. I'm looking through some of the questions and the chat. I wanted to note that this particular seminar is for nonprofits and for-profit businesses that are not sole proprietor necessarily, LLCs or 1099s only. If you're a single member LLC or a sole proprietor or a gig worker, you get 1099s. That seminar was last night, and there is a different computation on how much you can receive. And Lisa Certinovic went over that last night, and that's most of the time using your individual tax return if you're a single member using the 1040 Schedule C. So what I'm going to say is that we're not really covering that tonight. This is more for the businesses and nonprofits. I believe both of these are going to be posted tomorrow on the HAA YouTube. So if you're tuning in tonight and you're a sole prop LLC, or I'm looking at a single member LLC, though probably last night's presentation was more catered to you. And then also, if you do go look at that and you still have questions, you always have next Tuesday to come back and ask your individual questions and get that figured out if you're still confused and you're on this call, because this call is mainly for people that are filing taxes, either the 990 or they're filing a business tax return, basically, is kind of what we're talking about. I did, in answer to your question, Kathy, there's a couple of partnerships. It looks like an LLC partnership and then some nonprofits.
Okay, great.
Look like it's on here. And then I do know that when I had filled it out, it would not let me go forward without putting a number in the ownership percentage. And because if a nonprofit is supposedly not owned by one person, it doesn't really have an owner, as Kathy explained, so it would be 0. It would not let me put 0 when I applied. And so I put 100 and it went through, but I don't know. That's probably not what I was supposed to do. I mean, I would hope that some of the language on the questions ask that they know you're a 501c3, so they probably know it doesn't have people that own percentages. So I have a feeling that the program from the bank that I use just kind of overlooked that. But if that happens again, is that what you would recommend? If you
Right, because I mean, right, because at the top, you're putting what you are. You're putting that you're a 501c3 or a 501c6, or you know that you're a corporation or whatever. So you're putting that up there. So you know if they've got it to where you've got to put something in there, then you know I would just put 100%. I guess. I mean,
right. I mean, I could tell that the program last time, a lot of the people we worked with, it was not made for nonprofits. It was made for the business side. I'm hoping that that's corrected, but that might be something that if you could check out within the next week,
okay.
whoever you're going to apply with. And then if you have questions on that, or if the questions seem worded oddly and you're a nonprofit, then it might be coming back to us. I just say that as a warning because it was confusing on first round for numerous nonprofits that we helped because of the terminology on that.
Well, yeah. Well, that's true.
And then I wanted to address one other question. I think you've answered this, but I just wanted to say this because we've heard this a lot through the whole process of PPP1. If you have a nonprofit and you don't have employees on payroll, but you pay all independent contractors, that's a theater model, right? Where you're just paying actors to do things for certain engagements. You do not qualify for PPP as far as the nonprofit entity.
That is absolutely correct. You have to have, the whole PPP loan was based on employees. So if you do not have employees and you're paying 100% independent contractors, then you would not qualify for a PPP draw 1 or 2 for that matter. Now, you may be able to qualify for an EIDL loan. So if you haven't, you know, tried that route, then I would suggest going that route, but you're not going to be able to apply for a PPP loan in that sense. And
however, if that's how you get your money, you may be able to apply as the independent contractor.
Right, the independent contractor,
1099s, right?
But not you as that organization.
Correct.
I mean, that doesn't help you any. It may help the independent contractors, but it doesn't
right.
help you. So,
right.
And I want to quickly go back, and now we're kind of running a little bit out of time, but I wanted to go back because I skipped over this section. We were talking about, remember we were saying that you've got to have a 25% decline in your gross receipts. And so we need to define, one thing is we need to define what gross receipts are. From a nonprofit standpoint, you know, it's real easy if nonprofits look at their tax return. At the top, it always has, if you're looking at your 2019, maybe it'll have the total of what your gross receipts are on the top section of it. But basically for nonprofit organizations, it's everything that you get. So in other words, all your gross, you know, it's your program service income, you know, if you're doing that, you know, it's your grants. I don't care where they're from. If you have interest income, rental income, everything. If you happen to sell assets, if you did some fundraising, galas, all of that, you don't deduct any expenses on any of that. So it is a true total gross receipts number. On your for-profit businesses, then, and remember, as I said, you don't count the EIDL loans, the $1,000 you've got, or the PPP. For your businesses, it's all your income. It's rents, royalties, you know, the income that you get either from your services or products that you sell, all of that. What's interesting between the two is that nonprofits, if you are fortunate enough to have, you know, like a broker account where you have stocks and bonds that you sell, if you have a gain from those investments, that is included in your gross receipts total for the nonprofit organizations. But if you personally, we go back to that one member LLC, for example, if they look at what gross receipts are, they're not going to take, if they happen to also have a broker account, they don't count the interest. They count interest and dividends, but they don't count the capital gains that they would have received. So I think that's kind of interesting how that differs. It was asked, I was on a webinar yesterday, and it was asked, somebody came in and said, well, what if we're doing a special fundraiser for a capital campaign? That's included, doesn't matter what it's for, it's all included as far as your gross receipts. And I know that every one of my nonprofits that are on this call has QuickBooks or some bookkeeping type software. So when you're looking at it from the standpoint of, you know, the 25% reduction, there are 3 different ways you can calculate this. It's, you take 1/4 of 19, compared it to 1/4 of 2020. You can choose whichever quarter you want. You can do 1/4 of 2020 and compare it to either the 3rd or 4th quarter of 2019, or you can do 1/4 of 2020 and compare it to the 4th quarter of 2019. And I know that's kind of crazy, but you need to look at all of these different ways to do it. And, you know, when you've got like QuickBooks, you can just put in the dates, and, you know, and by the way, it's based on a calendar quarter, not based on a physical quarter. So I know a lot of you guys probably have, you know, your June 30th year end or whatever, but you're gonna, you know, you're gonna look at it from January, February, March, April, May, June, July, August, September, and October, November, December. So just wanted to throw that out. Applying for forgiveness. The good thing about this is that with the new law is that now, if you got a PPP loan for $50,000 or less, then you've got this new 3508S. Man, you file it. It's basically, you attest that you have used it for what you need, you know, the payroll and the covered cost, and you're done and out the door. So there's a lot of stuff you don't need to put with that. Now, I will say, since I don't know what all the banks are requiring, you know, they, you know, as far as how much you need to keep all of your documentation, but that doesn't mean you need to submit it. You've got to have it available for them in case the SBA decides to come back and say, hey, I want to audit you. I can tell you that more than likely, if you got 150,000 or less, it's probably very rare that the SBA would come back and audit. They just don't have, it's like the IRS, they don't have the time or the funds or whatever. They're going to be looking for these, you know, $1 million, $2 million and plus on that. So you don't need to worry. You need to have the documentation, but you don't need to necessarily worry about, you know, submitting all of that. And then quickly, the last item, I just wanted to mention a couple of other things that have come out about how are we supposed to report this idle loan and the PPP loan on your books and on your tax return. So those of you that are applying or that file the 990EZ or the 990, when you get the loan or when you got the first loan, it's not going to be any different than this one. When you get the loan, it's a loan payable. Sorry, guys, I'm going to debit and credit you guys, but you're going to debit. When you get the money, you debit the bank, you put it in your bank account, and you're going to show it as a loan payable because it is a loan until it gets forgiven. And then once it gets forgiven, then you're going to debit that loan payable and you're going to credit a grant, government grant income. This is per the IRS instructions. So it's going to be considered income to you. So for example, those people that got the first round of PPP in 2020 and they get it forgiven this year, then they're going to take it out of the loan payable and they're going to show it as a government grant on their tax return. It's also going to be shown on Schedule A on your public support test. And then those people that are my for-profit businesses, if you're filing the 1040, keep in mind that the loan, once it's forgiven, it's not income to you. So if you're filing a 1040, you're not going to put that anywhere. They're just not going to go anywhere on your tax return. It's those that are filing like the 1120S or the partnerships. Those are going to have a little bit different place to put those, because it's still not taxable income. And I also want to say something really quick with respect to, you may have heard, I don't know if we have any, what they call the shuttered, shuttered venue operators. There's that SVO grant, but if you qualify, that's fine, but you need to look, you cannot have an SVO grant and a PPP loan. So you need to kind of look to see whether what is the best avenue for you of which one to go to. I will say, and I should have put it down, I should have put a link on the slides, and I apologize, I didn't. But on the SBA's website, I will just say that there is a document on there. It's basically called the Second Draw PPP loans, how to calculate revenue reduction and maximum loan benefits, including the documentation. This is, I don't know, about a 20-page document. It's very easy to understand. It's question and answer. You were talking, Alyssa, about, how do I calculate certain things? And this, depending on, if I file a 1040, or if I file a, 990, or if I file the 1065, it goes step by step, line by line, as far as where you need to pick up, what line numbers you need to pick up. And so it's a wonderful, wonderful resource. And I would highly suggest.
Kathy, can you say where to find that again?
Yeah. Oh my God. It's on the SBA website.
Okay. SBA under the PPP second draw.
Yeah. I tell you what I can do is I can find it where I'll get the link and I'll send it to you and Lauren, and everybody.
I'll look for it also.
That way you can, upload it, because it's really, really helpful, I think, for anybody to be able to go back, and it's, pretty easy to understand. So,
great.
And I just, just in closing, I just wanted to let you know, this is my disclosure thing. This is very broad. There is a lot to these laws, and very, very detailed, and there's a lot of coordination. We didn't even talk about those of you who are supposed to have payroll. And if you do, there's the employee retention credit, there's the family and sick leave credits. There's all other kinds of credits with respect to payroll that if you're going to use those, need to be coordinated with the PPP loan. And so, which are very detailed. So I'm not getting into that, but, that's, if you have that situation, then we can do the one-on-one next week, or else you've got you'll have my contact information. So it's 8 minutes after, sorry.
That's okay. Can I go back to two other things quickly on the money that when you're looking at the 25% reduction, you would remove the PPP that you got for round one, and you would remove any EIDL money, correct?
Correct.
Would you also remove any other money that flowed through to you from the CARES Act? Because there's, like, in the city of Austin and Travis County gave money that they received from the CARES Act to businesses and organizations. And I had heard that could also be removed from that formula. Do you know that answer for sure?
I will say that when I was reading up today or yesterday, there was a question about some other type of government money that they said they weren't sure. I don't think it's what you're referring to though.
Okay.
But I can look at it and I'll send that to you and see if that's
Yeah, I had heard it wasn't going to count, but I have never seen an official ruling on that. So I want to be super careful with that. And so that's just something that as TALA, I think that we need to
gut tells me you probably wouldn't include it, but
right.
But you know, who would think that you would have to include your gains and losses from, you know, the sale of stock for a nonprofit organization, but not for a business? I mean, that, you know.
So yeah, I think that may be a popular question we get. And the other thing I wanted to say, I was on a couple of webinars and conversations yesterday about the shuttered venue operators. And we are advising people right now, if you believe that you qualify for that you should not apply for PPP. It is looking like pretty much the shuttered venue operators is going to be the best bet for you. We still have a little bit of time. So those people in particular, we're not telling to go rush out and apply for PPP, because if you do, you may not be able to apply for shuttered venue. And there was an alarming question on one yesterday. Well, somebody said, well, if I apply for PPP, I just won't take it, right? Because you have to sign a note or whatever. The answer was, do not apply for PPP, because they may come back and hit you and say, it doesn't matter if you take it or not, you already applied and you cannot apply for shuttered venue. If that's going to happen, it's a little alarming to me, because shuttered venue is not open and PPP is. And so this could be a problem if they are going to enforce that application status versus acceptance status. But I just wanted to throw that out there. TALA is following that. And so if you do feel like you may be in the shuttered venue, please keep in touch with us, or, you know, because we probably will be able to have some people kind of sit down and walk you through that application when it's done. So I just really wanted to mention that.
And
I will say,
go ahead.
I will say this about the Shuttered Venues grant. The qualifications are very specific, and we have those FAQs on our website that you can look through what the qualifications are to qualify for that. And you should look at those, and you can contact HAA or you can contact TALA to talk about whether or not we at this time think you would be eligible for that. But I would say you should look them over before you make that decision not to apply for PPP.
Yeah, they are very narrow in some ways. And so I do highly suggest that you look at either HAA or the SBA guidance they've given so far.
Yeah,
and if it does sound like that you qualify, then that's when you may need to think about.
Well, and I saw, going back to the SBA, and I can send that, I saw a little chart that they had to compare, you know, on whether, you know, what you should do, whether you should go the SBO or that. So that's really helpful. And I'll just, the last thing, keep in mind, guys, that if for some reason your loan, either the first one or the second one, it doesn't matter, isn't forgiven, it's at a 1% interest rate and you have 5 years to pay it back. You can't get those terms anywhere that I'm aware of. So it's not critical if, you know, you don't get all or part of it forgiven. You know, I mean, nobody wants to have to pay it back, but it's not that horrible. So with that being said, I'm done.
I wanted to let everyone know that we are putting together an events page on the ready.haatx.com website, which incorporates not just HAA webinars, but we'll also have all of the Houston SBA webinars. So the office that's in Houston is doing a weekly webinar on updates to and guidelines for the Shuttered Venues Operators Grant. And those will be on that webpage, which we will announce in our Friday newsletter. So that will be a good place for you to go to get information from the mouth of the Small Business Association about PPP and about this Shuttered Venues operating. I still think of it as save our stages. That's how we refer to it. Well, thank you guys so much. I don't think we have any more questions, do we?
No, I think I covered most everything. This is a lot for the business nonprofit side. It's a little bit more difficult, I feel like, and less straightforward than the individuals. And so I realize it's a lot. So I would just suggest that you try it over the next few days. Go into your bank. We didn't talk about where to go, but we would suggest that you go to the bank that you have a relationship with. Or if you're pleased with the first round, whoever you use, try that first. If not, there are some online banking financial institutions that we could refer you to. But I would suggest you try it, and you should be able to get into their application and see exactly what they're asking for. And if you're not comfortable or if you have questions, please come back next week and we will try to answer those individually. But it would help if you would kind of get on and go check with your bank and see what they're asking for, and then you'll know specifically what your question is.
Right.
Well, again, thank you very much to TALA, to Kathy, and to Alyssa for being here tonight, staying late until 7:15. And thank you to all of you for coming and for staying late. And we will send you an email in the next couple of days with an invitation to the small groups. And until then, stay safe, and we'll see you soon.
Thank you so much, Lauren, for having us.
Thank you.
All right. Bye.